In this video, I will reveal this month's biggest risers and fallers in the FTSE 100 and all the upcoming key dividend dates that you need to know about. This is not financial advice, so please do your own research. So, who are the biggest risers in the FTSE this month? At number 5, up 14%, is Anglo American. Anglo American is the world's largest producer of platinum. It also produces diamonds, copper, nickel and iron ore. Some investors feel that the shares are still cheap. Stronger commodity prices have helped raise the share price. There were some recent concerns about a fall in demand in metals from China, but this appears to have been a scare story, and iron ore prices are bouncing back, which has been helping companies like Anglo American. The yield is currently 4.2%. At number 4 is Shell, which has risen 17.3% this month. Shell is one of the world's largest producers of oil and gas. For transparency, Shell is currently the largest holding in my portfolio at just under £30,000. I've held the shares for well over 10 years, and I always buy when I see dips in the share price. In the time I've held Shell, they have paid me over £7,000 in dividends. The share price has made a spectacular comeback recently as investors focus on the rising crude oil prices. The recent tensions between Russia and Ukraine have further lifted the share price. The dividend yield is also 4.2%. At number 3, up 17.6%, is the multinational investment bank HSBC. The promise of higher interest rates has driven the banking sector higher. Higher interest rates enable banks to make bigger profits because they can generate a larger spread between their lending and borrowing rates. There are risks, however, and competition from fintech businesses is growing at a phenomenal rate, and they are stealing market share. The banking sector may look very different in a decade's time, but HSBC has the potential to keep rising in the near term. The dividend yield is 7.2%. I have held HSBC for 7 years. My current holding is £9,200 and I've received more than £2,000 in dividends so far. At number 2, with a price rise of nearly 18%, is BP. BP is a large oil and gas company that has operations around the world. The stock price has risen because of the strong performance in oil and gas prices. The crude oil price is approaching its 7-year high while natural gas prices have surged. BP currently pays a dividend of 4.5%. I've held BP for almost 13 years and I buy on the dips. My holding has grown to over £24,000 and I've received £8,500 in dividends so far. And just before I reveal this month's highest riser, you may want to consider subscribing and turning on the notification bell so you don't miss out on any future market updates. And the highest riser this month, up almost 21%, is Standard Chartered. Standard Chartered is a leading British bank that operates globally. The share price has increased because investors believe it will do well as interest rates increase, and it is seen by some analysts and commentators as one of the cheapest bank stocks in the UK. The dividend is currently 3.1%. And now for the FTSE 100's biggest fallers this month. At number 5, down 19.6%, is Evraz. Evraz is in the metals and mining sector and its products include coal, iron ore and steel. The largest shareholder of Evraz is the Chelsea FC owner Roman Abramovich. Evraz has operations in Russia and the Ukraine. The stock has slumped recently because of geopolitical tensions in the region. Goldman Sachs have recently given Evraz a sell rating which has further impacted the share price. Many of the companies I own pay a dividend between 4 and 6%. If a company pays a very high dividend, it may struggle to cover it and the dividend may be cut. Evraz currently pays around 9% dividends, but has a forecast yield of over 19% for 2022. I would question whether this kind of yield is sustainable in the long term. Mining shares can be very volatile. Coal and iron ore prices have already fallen 40%. At number 4, down 21%, is Croda, a multinational chemicals company. Its share price has risen dramatically over recent years, but this year it's experiencing a slump. Profits seem to have stagnated and the stock is seen as less appealing at the moment by some investors. I've been buying Croda shares recently, but only time will tell if this was a good move. My current holding is just over £4,000 and the dividend yield is 1.4%. At number 3, down nearly 22%, is Fresnillo. Fresnillo is a precious metals producer based in Mexico, and the shares have sunk recently after the company cut production. Disruption caused by the pandemic and new labour laws in Mexico have contributed to the downturn as well. The dividend yield is currently 4%. At number 2, down 23%, is Halma PLC, a company specialising in safety equipment and hazard detection. The share price has fallen dramatically, but despite lots of research and trawling through the internet, I still don't know why. The dividend is low at 0.8%, but it's covered nearly 4 times by earnings, which makes it relatively safe. So a company that falls 23% in a month with no obvious reason, maybe this is a signal to buy. I'll let you decide. At number 1, the biggest faller this month, down 23.6%, is Dechra Pharmaceuticals. Dechra specialises in veterinary healthcare. It joined the FTSE 100 recently and has had very strong share price growth over the last year. The start of 2022, however, has been tough for Dechra. Even though half-yearly results met expectations, the shares were downgraded to neutral by an influential analyst because of their high price-to-earning valuation. This suggests that even though the company is doing well, the shares were perhaps somewhat overpriced. Now for the ex-dividend dates for the month ahead. This February, there are only 2 companies in the FTSE 100 going ex-dividend: Imperial Brands and Diageo. I've held both these companies for several years. If you hold shares in Imperial Brands before the 17th of February, you will receive a dividend of 48.48 pence for every share you hold, and you will be paid this on the 31st of March. If you hold shares in Diageo, the maker of Guinness, before the 24th of February, then you'll receive 29.36 pence for every share you hold, and this will be paid out on the 7th of April. And now for the dividend payment dates. On the 1st of February, United Utilities will pay its shareholders a dividend of 14.5 pence per share. On the 4th of February, we have 4 companies paying out: Aviva Group, Vodafone, Experian and Halma. On the 7th is BT Group. On the 9th is British American Tobacco. Ashton and Sage pay out on the 10th, and Compass Group pays out on the 28th. Please like and subscribe if you found this video useful. See you next time, and happy investing.